SNP £290 million tax hike on middle cla.sses will wreck economy. W.arn business chiefs. 58% of Federation of Small Businesses, FSB, members want income tax rates to stay at their current level, with 21% backing a cut. A further 21% support Finance Secretary Derek Mackay's £290 million raid on Scotland's middle classes, which is widely expected to be confirmed in Thursday's Holyrood budget. Almost two-thirds of small business owners, 65%, said an increase in income tax will damage the economy, with just 18% saying it would be a boost. Meanwhile, the independent Reform Scotland think tank also called for taxes to remain at the same level as Westminster and warned any rise would be detrimental to economic performance. The FSB polled 315 businesses in November after First Minister Nicola Sturgeon backed modest tax rises to protect public spending, despite Scotland already being the highest taxed part of the UK. Scottish policy convener Andy Wilkes said, "A clear majority of those that run their own business in Scotland don't want the Finance Secretary to increase income tax rates." Those asked warned of the impact on the wider economy, and little wonder with pressure on household incomes and uncertainties about the impact of Brexit. The First Minister has set out 4 options for raising more tax and warned those earning more than £31,000 could be in line to pay hundreds of pounds a year extra. The FSB said most of its members were basic ratepayers, meaning they would not be among the hardest hit by the proposed hikes for top earners. In a letter sent to Mr. Mackay last Friday, Mr. Wilkes explained, "Our members largely view this question from the perspective of what is better for the economy as a whole, rather than their own personal finances. In other words, they are more worried about their customers' wallets than their own." He also warned that 14% of members would consider the radical option of moving their business out of Scotland altogether if income tax rates rise. Reform Scotland said there should be no further increases until Holyrood gets full control of all taxes, including VAT and corporation tax, under the so-called Devo Max option. Chairman Alan McFarlane said, "Income tax alone represents a disproportionate and blunt instrument which is incapable of creating the conditions for economic growth. Altering the income tax rate to make it different from Westminster, far from being beneficial, could be detrimental to Scotland's economic performance and lead to a drop in revenue available to spend on public services." Former RBS chief Sir George Mathewson also urged caution. Sir George, who served as economic advisor to former First Minister Alex Salmond, said, "I'm not keen on additional taxes at any time. You have to ask whether it will increase the government's tax take or simply convince people to change domicile, which could mean you end up with less revenue. You have to consider the negative aspects of tax increases." However, billionaire engineering boss Jim McCall, whose firm employs 6,000 people, said, "We need to strengthen other parts of our economy so we're not dependent on consumer spending for growth. If tax rises help achieve that, it is good for Scotland." There are also signs of a split within the SNP, with one business-friendly MSP from the party saying, "We need to be very careful that this doesn't damage revenue or the economy." And Gordon McIntyre Kemp, chief executive of the pro-independence group Business for Scotland, has also broken ranks to say he is against increasing income tax. The warnings come after Tim Allen, the president of Scottish Chambers of Commerce, publicly challenged Ms Sturgeon over her tax plans at a dinner last week. Last night, Scottish Conservative Shadow Finance Secretary Murdoch Fraser said, "There is now a serious consensus within Scotland's business community that the SNP should not increase income tax. The nationalists must listen to this or else workers will be hit in the pocket, and the broader economy damaged as a result. There are plenty of ways to grow Scotland's economy and generate more cash for public services than hike taxes. It's time the Scottish government considered some of those." A spokeswoman for the Scottish government said, "Our income tax discussion paper outlined 4 key tests that we feel any change in income tax must meet. One of those was that, when combined with our spending decisions, any change in tax policy should support the economy. Following this careful and considered discussion, We will publish a balanced package of tax and spending proposals as part of the draft budget on December 14.